Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, May the 14th. I'm Eric Wilkinson, and yes, you very well may recognize me as the Wolfman from mainstream media, where I've talked about economic data, the overall geopolitical environment, and how that impacts our overall market analysis. Well, I still do that in these daily market commentaries, but I layer on top of it some option strategies that we can implement into our portfolios to increase that overall yield. That is the only way to really increase the overall yield than going out and buying an ETF and say the S&P. So we will do that in daily market commentaries. I'll talk about that a little bit, about the option strategies I'm using. If you want to find out the roadmap or the blueprint on those option strategies, when and where is the right time and place to implement those types of strategies based on your assumption, then check out my webinars that I do every Thursday right after the close, where we dive into the nitty-gritty of option strategies and talk about what will help us in implementing these option strategies to increase our overall probabilities of success. But without further ado, let's talk about that economic data. Pretty important day today, right? We had unemployment claims coming in at almost 3 million again this month. They did revise last month's number up from just a little bit. When we're only talking 10,000, that doesn't seem like a big deal. Well, before 10,000 used to be a big deal. Now we kind of round up 100,000 with these crazy numbers. You know, normally speaking, we would be talking about maybe 175 to 250,000 jobless claims on a given week. Well, we got 3 million. So we are really pushing the envelope on unemployment and moving towards those Great Depression levels. All right, importer prices came in slightly lower than expected at negative 2.6%, expected to be a positive 3.1%. And that's about it for the economic data. We should actually be getting natural gas storage numbers coming out, and that was pretty close to in line with expectations, maybe slightly below at 103 billion cubic feet, expected to be 107 billion cubic feet. Something to note with the natural gas, we get a lot of our natural gas from the fracking operations. Is basically a byproduct of that, and we should probably start to see some of these supplies come off a little bit. You know, there is a lack of demand heading into the summer. We use a lot of natural gas for heating, at least on the retail level. But we'll see a lack of demand there, but we're also going to see a lack of supply coming in to the market based on those pulling back of fracking. Remember, we talked earlier on in the week about Chesapeake Bay. They are huge into fracking and maybe looking at Chapter 11 here. All right, so that's pretty much it for the economic data. We also have Kashikari speaking as of right now, I believe. All right, so moving on to the overall markets, we've got crude oil above that $26 a barrel mark that we've been talking about. That has acted as resistance quite a bit lately. We haven't settled. That's really the line of delineation there. We haven't settled above that $26 a barrel mark, but it looks like with the strength we're seeing today that it might very well do that. I don't think it's based on demand or supply or any of that stuff, because we've talked about the supply coming onto the market still hasn't met the lack of demand, despite the fact that we're seeing cuts in Saudi Arabia and the Middle East and here in the United States based on the price, and they're just not able to make money on producing crude oil. That supply drop isn't making up for the demand drop. Yes, we are getting back to work. As a matter of fact, here in Arizona, you're allowed to go to the restaurants and things of that nature. So we expect more and more people to start getting out in those cars and driving them around rather than having their cars sit in a garage for a couple of weeks and not filling up. That is also being a part of this whole drive in crude oil. Gold futures moving higher by $27 right now as we speak. A big move here. We are testing the upper bands if we talk about the GLD. Remember, I have on that iron condor, so I want to see it stay within this range that we've been talking about here. As we have gotten into that trade with high implied volatility, we want that volatility to come out And that is what we're seeing, as we can see down here with the, let me change my color there. We're seeing volatility come out of at least gold futures. We should start seeing that volatility come out of GLD as well. But I want to see this market stay pretty much in line with something along these lines here. That's the safe zone. I have a lot of wiggle room to the upside and to the downside, but I want to see it stay and trade within this area right here. Okay, so we're starting to see this band build up here. As in time, we're not seeing a lot of volume exchanged at those levels. So that, to me, it's accepted at these levels. People believe, kind of like where I am in that camp of around 1700 is value, but they're not really changing hands on trading. People aren't feeling the need to get out of it, and people aren't really feeling the need to get in. So to me, that tells me that we are becoming very complacent at these levels, which is a good thing for a strategy like that iron condor that I put on. And I did that based on the webinar that we did on the iron condor, you guys. We went through the whole step process of what we want to find, something that we believe is a bit market neutral, finding it at value where the market's really not going to jigger too much. Well, that was what we did in GLD based on this gold futures type of trade. So you want to know the rules to that. Strike location, something you aren't going to find online. That's what I talk about in those webinars as well. We need to have a specific strike location that we can stay mechanical with. It's not like just pulling a feather out of a hat and trying to figure out what it is. We have specific guidelines for that type of trade. Bonds, moving higher by a point here as well. A lot of this is basically having to do, we talked about, it can't go much below, it's not going to want to, I should say, go below 180 too much. As you can see, 178-ish is kind of that real low level. It's actually a bit higher than that where we're starting to see a lot of support. It stayed above that 50-day moving average, and we're probably going to see a lot of resistance right at that 183 level. So those are the key marks to look at. 183 even in the bonds, and about 179 really anymore, because that line kind of really should probably be here. And again, similar to what we saw over there in gold, we're starting to see some time spent there, complacency. That shows where the value is. I've been talking about this for quite some time. Somewhere up above that 180 handle is really where I think that it should be. Somewhere between 180 and 183 is where we're going to start seeing a bounce back and forth. I've talked about that for a couple of months now. That's what we're starting to see happen here as well. It gets above 183. That could catch some people off guard. Will pop, but I really don't think that we are going to see those all-time highs anytime soon. We'd have to really see a real shift in the paradigm of what we think is coming out of this pandemic. And, that was the height of the fear, if you remember. So we were talking about negative rates even in that long-term bond. Still talking about that negative rate in the short term. I don't think that we're going to really see that, but it very well could push at least 30-day Fed funds into negative. But I would hope that that doesn't happen. All right, we've got the VIX moving higher again today. Looked like we were going to test that 40 handle. I've been saying for a while now, 40 is the new 20. Well, we went up there to test that. That's when the Dow Jones was down over 400 points early this morning, right off the bat. We've kind of gotten a little bit of volatility coming back into the market as we saw over there in the VIX, but that's because we're seeing some wild swings over here in the Dow. It is a battle between, you've kind of heard me thinking about this stuff. Well, we've had a massive rally. Yes, they are forward looking, but are we going to have that quick of a recovery in the overall economy that quickly? Well, so some of the people like me that got in on these lows are now really kind of feeling that volatility or that angst, that fear that maybe we've gotten a little bit overdone to the upside. Yes, I do think that I've gotten my portfolio into the right stocks and have definitely benefited from this upside, but now a lot of people are in the same camp as me. While we are maybe at value and maybe a little bit more, is it time to start paring back on some of those nice winners that we've had? So we're starting to see a pullback. Today is going to be key for me based on what we're going to be seeing in this chart setup. So for instance, perfect example right now, we're seeing a nice chart setup here in the Dow Jones Industrial Average Futures. A nice bottom pattern like that would be something that I'm going to stay in and around. We came down, tested this 50-day simple moving average. This is the 50 simple moving average coming down there. As you can see, we came down, kind of broke through that just a little bit. We're outside of the value area, so a lot of things there are telling me this market might want to curve back up. So tomorrow what I want to see is obviously a green candle based on that bottoming pattern here. So that would be a good thing. We are seeing this line here happen where we've gotten below kind of a double test there. One thing some people might say is that we've broken this little bottom there, creating a new low. I'm trying to draw too many things there, but as you can see, we are seeing that this low here is a little bit lower than this low here. All right, so that's something we're going to have to keep an eye on. I think that if we finished out somewhere around here, as you can see now, the Dow Jones is only off by about 2 points. We can call that unchanged as far as I'm concerned, but if we draw this line on here, we can see that the low of today was 700. So, 450 points below where we are now. 470 points almost, all right? So those were the lows. Did that flush out some of those weaker hands? Now we get this move back. I would definitely like to see the Dow Jones finish in positive territory today, or at least up in and around unchanged, because that to me would make it a nice, at least technical setup for a bull move happening tomorrow. Now we do know that we've been seeing a lot on Fridays where people are not too keen on holding positions over the weekend, and we see a lot of selling pressure happening on Fridays as they don't want to go into the weekend and have some unknown arise where they are stuck in some positions. So that is going to be something we're going to need to keep an eye on as well. Here we have the Nasdaq. It is one of the ones that is on the downside, right? We're off 50 points. We're seeing the Dow move a little bit higher. Well, it's a bit of a flip of what we've normally been seeing, where people have been pumping their money into this tech sector because that's where people are consuming at this point, right? We're seeing a lot of people consume tech because they're at home, they're working from home, whereas some of those blue chips are going to have things like Deere, Caterpillar, and some of those infrastructures that may be a little bit more problematic going forward, and people knowing that the tech sector is something that is a wave of the future. That's been the leader to the upside, right? Well, that's where I'm talking about. Now those things are starting to look like they're a little bit closer at value, and people are looking to pare back some of that, which is why we're seeing the downward pressure in Nasdaq and a flow into some of those other sectors or the blue chips, where people have found a little bit more of a risk appetite. We still have that risk appetite. Those are some of the ones that may have been a lagger and are looking to, people are looking to find value in some of those names. E-mini S&Ps, very similar to this. It does look a lot better, though, on the chart setup as we look at the candles here than it did with the Nasdaq. Nasdaq being a little bit of a drag on everything. But again, we're having a very similar setup right there in this candle we're getting today. Again, a little bit overextended to the downside. The value area is above. I've been talking, I think that we're going to want to trade between this area, in between those 2 points of control. This week we've seen some weakness across the board. A lot of that, Microsoft has been driven as people have been getting into that stock. They're 50% of their income or their earnings are due to Accenture, and that is basically cloud-based web services. All right, so that I think is going to be huge going forward. but some people believe that maybe they have been a little bit overdone to the upside. So that's causing a little bit of weakness here in the E-mini S&Ps as well. I can see it over there in my portfolio that Microsoft isn't doing too well. It's off by about $3 today. But it was good timing for me on selling some of those 200 calls there. Those are looking, we're doing covered calls in a lot of these stocks that we got put to us. Here we go on the overnight inventory, or overnight inventory was overall short, as you can see. Now we've done a pretty good job of flushing those guys out. I've talked about this time and time again. Anytime we see the market flush out what the overnight directional move was, that is positive for the market, or a continuation of what the market wants to do. We flush those guys out. That could be that reversal, actually, is the day session being the pattern that we're looking for. If they don't flush those guys out, it looks like we're going to continue to the downside. But since we have done that, flush those guys out, it feels very strong going into the end of the day here. All right, that's all I've got for you guys. We could take a look at a couple of stocks here that I have in GLD. This is what I was talking about, testing that upper Fibonacci of mine that I have lined up there at 163.50. You can see we're just slightly below that. I do expect us to want to stay in and around these two Fibonacci's as we have done, and see some volatility come out. Now, anytime we see big rallies in gold, that's usually when we start to see volatility spike a little bit. As you can see, volatility moving a little bit higher here in GLD today. So I was looking at covering this earlier on in the day, but we started seeing that equity come back, and I decided to hold on to this a little bit longer. If we start seeing some real weakness in the equities, that might be a time to pull the trigger on getting out of this trade here. All right, so that's all I've got for you guys so far today. We could take a look at a couple of other things. One thing I'm not too happy about is that Walmart trade that I legged out of, and as you can see, I was legging out of it yesterday when we were testing that 125 handle. I expected a third time through and cover this gap. Not happening today. A lot of people selling off on Walmart, which I'm pretty surprised at, because I believe Walmart, Target, and Costco are going to be the brick and mortar stores that do very well going forward, but it could be a lot of profit taking going on heading into their earnings. Now, we already saw Costco and Target do very well, so I'm expecting Walmart as well. I know we've been doing a lot of Walmart shopping, so it's pretty busy. That's all I got for you guys today. Holding on to everything else. We are going to be doing a webinar though today. So after the close, we're going to be talking about how to do the broken wing butterfly. That's a great strategy that we can implement into our portfolio, increasing our risk parameters just a little bit, or our risk tolerance, or trying to increase the risk on this strategy a little bit. But how we get paid off is why it makes it worth it to implement this strategy. So check that out. Go to protraderstrategies.com and find out how to build out a broken wing butterfly, because one thing I always talk about, it's not only about diversifying your portfolio with different stocks, it's also using different option strategies. Don't be a one-trick pony. Know how to do all these different types of scenarios and build this out according to a blueprint that we're building for you guys, and then follow those and stay mechanical. All right, so go over this disclaimer, please. We are an educational company. I'm not here to give you investment advice on any of these stocks that I've been talking about. All right, so keep in mind, past performance of any trading system or methodology is not necessarily indicative of future results. If you can't take that, take it easy.